Well, it seems to be a question of who will blink first. The battle between central banks and bond market participants that's playing out the world over is actually taking place here in India as well. The Reserve Bank of India seems to have drawn a line in the sand with regard to the rates, and bond market participants seem to be very keen on crossing that line. What are we talking about? Well, we're talking about the auction that took place earlier today, where the RBI was auctioning government bonds of as much as 31,000 crore rupees through 4 government bonds. And what happened was that the demand was not too great, to say the least. Only 11,569 crore rupees worth of bonds were actually absorbed by the market, and the rest was devolved on primary dealers. So over 60% of that auction had to be picked up by primary dealers, who, as you know, are market makers who are brought in to underwrite these auctions to ensure that they succeed. Now, whenever there isn't enough demand, primary dealers step into the breach and they sweep up what is left. What they swept up was 19,430 crore rupees, and that's the highest amount that was devolved since the Taper Tantrum of 2013. You're probably wondering what all of this is about. There are two glaring issues from the Indian perspective, and those are: the first one is that the government has a very large borrowing program for the new financial year, that is 12 lakh crore rupees, and it was expected to finish borrowing its requirements for the current financial year before the budget. That did not take place. The second aspect, of course, is something that central banks across the world are dealing with. There's an expectation that the growth recovery will lead to an increase in inflation, and that is also pushing yields higher. During the day, yields in India, that is the 10-year government bond yield, spiked to 6.26% before it cooled off and ended at 6.23%. The RBI has been conducting open market operations to bring those yields down without too much success. So the question that remains is, will the RBI blink first, or will the bond market?